Time for the market report. Zac has that, and with everything happening in the world, as you might suspect, the key word is daunting.
That's right, Mike. You could say that again. There's so many factors going on these days that we really can't talk about them all. But we will talk about the major movers and shakers. But first, the numbers. Row crop still dominating the conversation. Then this month's WASDE report dropped, and boy, was it a doozy. And finally, our row report. As you'll see, it's anything but normal. Markets evenly split last week. Row crops the biggest movers, save for lumber. The WASDE report definitely had an effect on it. But before we dive into that, let's take a look at the numbers. Last week's biggest loss, lumber down nearly 57.5 bucks. Corn also down 3.5 cents. Last week's biggest gain, wheat up 69 cents, followed by soybeans at 24.5. So the May WASDE report dropped last week, and it was pretty interesting. They noted significant changes taking place since the start of the Ukraine war. With all that in mind, row crop changes were the definite takeaway. And for obvious reasons, we're dealing with war, drought, and inflation. So here's what it said.
U.S. wheat shows higher production, up 83 million bushels with higher yields and slightly less harvested area. Winter wheat down 8% from last year, while spring wheat projected slightly higher. Projected ending stock 6% lower than last year. Season average farm price $10.75 per bushel. Global wheat production 4.5 million tons lower due to Ukraine war. Food use increased while feed and residual use decreased. Global trade a record 204.9 million tons. Exports up while ending stocks reduced 5% to 267 million tons, the lowest in 6 years. U.S. corn production down 4.3% from last year. Yield projected 177 bushels per acre. Total corn supplies forecast down 2.7% to 15.9 billion bushels. Season average farm price $6.75 per bushel. Global corn production down, also due to Ukraine war. World use down 1.2%, consumption down 0.9%. Global corn ending stocks down 1.4% to 305 million tons. U.S. rice production projected down 5%, projected yield 7,596 pounds per acre, down 113 pounds from last year's record. Projected imports up, domestic and residual use lower. Season average farm price projected at $17.80 per hundredweight. Global rice production up at a record 514.6 million tons. World rice consumption also up nearly 8 million tons. Global trade projected higher, while ending stocks down 3.8 million tons. U.S. soybean crop projected up 5% from last year on higher acres, beginning stocks lower while crush, exports, and ending stocks higher. Season average farm price $14.40 per bushel. Global soybean production for 22-23 up 45.3 million tons despite drought in South America. In China, soybean crush forecast 6 million tons higher. Global exports expected to increase 9%. U.S. red meat and poultry production for 2022 raised with higher beef and poultry and lower pork and turkey. Egg production lowered on lesser laying flocks. Beef and broiler exports raised, while pork and turkey exports lowered. 2022 U.S. milk production forecast raised. Cheese and butter prices raised, while non-fat dry milk and whey prices lowered. 2022 all milk price forecast at $25.75. U.S. cotton production reduced 100,000 bales, exports and consumption unchanged. Ending stocks estimated 100,000 bales lower at 3.4 million. Projected season average farm price 92 cents per pound. Global 21 and 22 estimates show lower production and use. India's crop reduced 1 million bales. China's forecast reduced 500,000 bales. Ending stocks slightly lower, down 270,000 bales to 83.6 million.
So, with the WASDE as our baseline, what do the experts have to say? Well, times are interesting right now. Market analyst Naomi Bloom says the report made it clear that row crops are the major market mover right now. And corn in particular has quite a hill to climb to meet expectations.
Well, this is a year where everything is not normal. Again, it goes back to those 9 commodities with the tight grain and oilseed, the tight ending stocks. And that's what still is setting the stage for this whole thing. So as far as the wheat market goes, on the USDA report this week, they cut the old crop ending stocks, they cut new crop ending stocks so that they're going to be smaller than the old crop ending stocks for next year. The weather was a factor because we saw abandoned acres on the USDA report for Texas and Oklahoma. So that is definitely affecting the market because production is down for the winter wheat crop and the winter wheat ratings are still bad. And then you look at the spring wheat market where that crop is, really behind on planting, just like everything else, with producers in North Dakota and Minnesota really going to be in a struggle to get anything in the ground. So weather markets and USDA reports combined for an explosive wheat market this week. And I think actually you're going to still see that wheat market continue to climb, and we're not out of the woods yet. For corn and trendline, the USDA did something they haven't done in over a decade, where they did not use their February baseline projection yield number. We were thinking it'd be like 181, because that's what they said in February for yield, and they already backed it down to 177. Which is still near record, same as last year kind of a situation. So you're still asking the market for a lot. So if we don't have 177 yield, we're in trouble. And the price of the grain has not reflected that yet. If we don't have the yield out there, if we don't have 177, we're sunk. We are sunk. The demand is that strong. The new crop demand and the new crop marketplace, we have ending stocks tighter than this year already projected for next year. So looking at the corn charts right now, we saw the market get up to the 755 area for Dees contract and then back off, go back up, test it, back off, and now we're back up to that price point again. If we can get through 755, you'll see December corn hit to $8. That's the swing objective higher. So we are going to be trading crop progress reports. We're going to be trading every single weather forecast. We're going to be watching demand and watching, of course, the weather around the world still.
And that's it for a deeper look into the markets. So much uncertainty with so many variables. No wonder the markets seem so daunting.